Welcome back to Upside Down Data. We need to talk about Render. If you're not familiar, Render is a decentralized GPU network, and therefore it has a fit with the AI narrative that's, of course, very hot right now. And we can see with Render's price action that it has done extremely well this cycle, really latching onto that AI narrative and powering it higher. If we just look from the bottom here up to where we are currently, talking about a 3,800% move to the upside. Very impressive indeed. But just looking at more recent price action, we also see some impressive movement in that obviously Render had a correction like the rest of the crypto market did during this time, but it is now rallying up nicely. And in fact, it is rallying better than a lot of other assets, certainly better than Bitcoin, which on the day right now is down 4%, Ethereum down 4.5%, yet Render is still in the green. Now, part of this in the short term is probably that there was some news that was bullish for Render, or RNDR, the native token. That was that Apple had a promotional video where they briefly mentioned a program that runs on the Render network. So that probably is at least a short-term catalyst to the upside. But even beyond that, we're seeing some nice price action. So what I want to talk about in this video is what are some of our models here at the channel seeing about Render and where they think RNDR might be heading next. So this is our short-term upside downside potential indicator. This is one of the risk models that we have here at the channel and at our website, partydigital.io, link in the description. And as the name suggests, it cares about risks. So higher values are higher risk, lower values are lower risk. And it cares about moves that play out over days to weeks, so shorter in its time horizon. So you can see that it does a fantastic job of identifying these high risk points in the market before corrections often follow, at least in the short term, as well as these low risk points that often act as good accumulation zones before rallies start again back to the upside. So looking more recently, we can see that the UDPI, short-term UDPI, got pretty high here, got all the way up to 3. 5 is the top of the scale, so 3 is pretty high. Actually, basically the same level as it got at this local top. And then indeed, then we saw a correction. So this was not unexpected whatsoever. Coming off of these risk levels, you would not be surprised at all to see a correction, and that's exactly what we got. Now, risk then cooled off quite a bit, getting all the way down to about negative 1.6. And we're now starting to move back to the upside on both price, but also risk is starting to rebound as well. So what I think this suggests is that there still is plenty of realistic upside potential for RNDR to work with in the short term if it wants to. We're only just above 0 here, being the neutral point. We still have this entire top of the scale to work with. So not be surprising, especially if broader markets allow, for RNDR to be able to continue moving to the upside. Now, you'd probably ideally like to see Bitcoin and Ethereum start to move up again before getting too confident in Render being able to just rally on its own. I'd feel much better if Bitcoin and Ethereum were rallying and Render rallying more, maybe, versus it rallying on its own while the rest of the market tanks. I don't think that's probably as likely. So that's something certainly to watch, but it definitely has that upside potential there if it wants it. We can also see when we look at our trend confidence indicator, TCI, some other hopeful signs, at least in the shorter term. So this model cares about trend. And basically what you can do with this model is look at how it's moving relative to price. So if you see the TCI start to move up really aggressively, then price often will follow. If you then see the TCI move down aggressively, then that often will mark the end of that uptrend and the beginning of a correction or consolidation. And we saw that again here. The TCI starting to move up, and then price followed up along with it. But then the TCI moved down aggressively here, suggesting that there was weakness, and indeed price fell off with it. But more recently, you can see the TCI starting to move up, jump up more notably, really kind of break out of this local downtrend to the upside. So if this can continue, if we see this move up even more, that would just be more confirmation that this rally might have legs and could maybe take us to new highs relative to what we saw in March. So something I'm going to be watching closely. Now, obviously, none of that's financial advice. You should make your own opinion, but that's what I'm seeing with this model right now. So then if we flip over to longer term considerations, I want to talk about our long-term upside downside potential indicators. So this is similar to the short-term version, but it cares about moves that play out over months to multiple months, so longer in its time horizon. Again, fantastic at identifying these big major topping points as well as these deep value zones in Render's history. So you can see we had some kind of volatility as we started into this run, dipped down to the deep negatives, then went on this big run here. And now risk is cooling off. We got really high on the long-term UDPI here, which again made it not surprising at all that render had a correction. But fortunately, risk was able to cool off notably since that happened. So now the question will be, has risk cooled off enough to really allow for sustained move to the upside here? Or if we do get upside, is it more likely to just be a short-term affair where we go up, maybe get up to similar levels we got to this last peak, maybe make a little bit of a higher high, but not really setting us up for one of these massive movements that we've seen, like for example, starting here, going all the way up through here, or starting down here, going all the way up through some of these levels. Maybe this is more of a shorter term thing if long-term risk hasn't reset enough. But that being said, we still have seen a decent reset all the way down to about 1. Remember that this move here really came off of levels of just above 0, and that took us up a meaningful amount. You know, we're talking about well over a 2x move to the upside that we saw here. So it certainly is possible. It's something that'll be interesting to watch. But I do think that at some point it'd be nice to see render have a deep reset, like for example what we saw here, to really let risk cool off. That could then set the stage for that next really explosive move. So time will tell, but that's something I'm going to be watching from that longer term perspective. I think short term things are looking good if broader markets allow. Longer term, we might like to see a little bit more resetting before we get too confident. All right, so the final model I want to talk about is our momentum bias indicator. And this model gives a fantastic idea of where an asset is in the market cycle. So this cares about momentum, as the name suggests, and it's really about, is momentum dominating to the upside or dominating to the downside? So in bull markets, you'll see a lot more time in the green than in the red. And then in bear markets, a lot more time in the red than in the green, if at all. But then you get these periods of kind of oscillation around 0, which tend to happen as you move out of bear markets and then you're going into new bull markets. The idea is that you're kind of trending around kind of relatively neutral momentum, potentially, maybe slightly positive, and then that can set the stage for that next move up. And that's exactly what we saw here. This was this transitionary behavior on the NBI. And now we've entered into bull market behavior, more or less. A lot more time in the green than in the red. And indeed, we've actually gone back up. We had a dip down below 0, but now we're just right back up above it with this move. So this is suggesting to me that render is still very much in a bull market footing. We have not seen one of these catastrophic breakdowns and then a failure to get back up into the green like we see in bear markets. We're really still acting like we have acted in prior bull markets. So that's where I think render probably has more juice left in the tank. Although, of course, it's going to be important to keep an eye on broader markets and see if they remain conducive. If you see Bitcoin break down meaningfully, I don't think render is just going to go on its own and have a massive bull run while the rest of the market is tanking. But as long as we see the rest of the market hold up reasonably well, I think render is positioned well in this current phase of the cycle. It has a very nice narrative fit with AI, and it certainly doesn't seem like AI is done yet as being a hot narrative. So as long as crypto is doing well, I would expect AI tokens to do well, and render is, of course, one of the more prominent ones. Now, obviously, the best time to get into render is well behind us. You know, if we just look at the price chart, we can already see that. We're already up, as we just talked about, over 3,000% to the upside from the lows. This was obviously the best accumulation point. But that doesn't mean that it's over. In bull markets in crypto, especially something like a hot narrative like AI, things can go up quite a bit. So I think render is worth keeping an eye on, though don't expect it to be as impressive going forward as it has already been. I suspect most of the gains that are going to be made have been made from render in percent terms. That doesn't mean it can't go significantly higher from here. So not financial advice. You should make your own opinions about render and other assets and what you think makes sense. But that's what I'm seeing with the data right now. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates put on models and more over there. And you can go to our website, polaritydigital.io, to see live data from our models and more.